In today's video, I'm going to do a stock market analysis of Tesla. I believe Tesla is completely overvalued, and I'm going to explain why in the stock market analysis. Let's get into the video. So first of all, Tesla's stock price currently is $405.55. It's lost 39 cents at the close today, which is 0.1%. So having a look today, Tesla traded between $399 and $408. If we look at the last 52 weeks, it's traded from at the lowest point was $214 and at the highest point was $498, nearing 500. Now, if we have a look at the average trading volume, we can see that 61 million shares on average each day is traded, which is a very large amount. It is a very big stock though, so it does make sense. So the current market cap for Tesla is currently $1.52 trillion. To work out what the market cap is for a stock, all you need to do is look at the current share price and then times that by the total amount of stock. There are currently 3.75 billion shares outstanding. So you simply times 3.75 billion shares by the current stock price, and that will give you the current market cap. Now, if we have a look at the earnings per share ratio, we can see that for every share Tesla owns, it makes $1 per share. To work out the earnings per share, all you need to do is look at the net income and then divide the net income by the total amount of shares outstanding. For this year, Tesla, $405 per share, you are making back $1 per share. Now, looking at the price to earnings ratio being at 377, that's extremely high. If you do look at the dot-com bubble, some shares were actually having a price to earnings ratio of 1,000, and some of those shares, their share price actually dropped around 90 to 95%, wiping out almost all the value. Now, to calculate the price to earnings ratio at 377, all you need to do is get the current share price of $405 and divide that by the current earnings per share, which is $1.08, and that'll give you a price to earnings ratio of about 377, which is absolutely outpriced. I honestly won't invest in a company that has a price to earnings ratio over 40. I just find that they're just way too overvalued. Some investors will speculate and actually invest in these sort of companies based on they believe that the company is going to have massive growth down the line, but seeing that Tesla has a market cap already of $1.52 trillion, I don't see Tesla gaining an extra $10 trillion out of the blue. It's going to take an extremely long amount of time if that were to happen. But before we even look at that, we got to look at Tesla's financials. Before we look at Tesla's financials, we can see firstly that Tesla is not paying any dividend to any stockholders, and therefore the forward dividend yield is blank and the ex-dividend date doesn't exist because it hasn't paid any stockholders any dividends. And seeing how Tesla has a price to earnings ratio of 377, I can definitely see why they haven't been paying any dividends. All right, so next thing on MSN Money, you can see top stories of what's happening in Tesla, but realistically, if you're going to invest in a company, you want to invest in a company that's going to have a sustainable competitive advantage against its competition. We're not going to look at it today, but Tesla does have extremely strong competition out at China with BYD. In another video, I can go into a comparison between Tesla and BYD and see which company would be a better investment. So what we're going to do now, looking at the financials, we're just going to have a skim through the revenue, the gross profit, its expenses, and the net income. So firstly, we'll look at Tesla's revenue. From 2018, it was only $21 billion, and now in 2025, it's gone up to $94 billion. You can see that its revenue actually decreased from 2024 and 2023 to 94 billion. So it's not the best outlook in that sense. When you're looking at companies, when you're looking to invest in them, you do want to see consistent revenue growth over every single year. And it does look like Tesla's revenue has halted a little bit. So you can have a look through Tesla's growth, profit, operating expenses, and see if it's in a consistent pattern every single year and see if the gross profit is increasing every year. Same with the operating income. But what I like to go to is the net profit, the net income. And what we can see in 2018, Tesla lost nearly $1 billion. So they lost money. In 2019, it lost $900 million. And then it started gaining money from $700 million to $5 billion until 2025, where it gained $3.8 billion. However, when you look at Tesla's previous year in net profit and even the year before, it's gone from making in 2023 $15 billion to only having a profit of $7 billion and now only a profit of $3.8 billion. That's not the most positive sign when its profit has decreased 50% one year and then 46% the next year. The next thing we'll look at quickly is the balance sheet. So we can see what the current assets are looking like, what the liabilities, and how much long-term debt Tesla has to pay off. So if we look at 2018, the current assets were $8.31 billion. Up to 2025, the current assets are $68 billion. Looking at the current liabilities, back in 2018, the current liabilities were higher than the current assets at nearly $10 billion. And now in 2025, the current liabilities are $31 billion. However, the really good news here is that with the current assets increasing every single year, the current assets can more than well pay off the current liabilities. And when you look at the long-term debt, Tesla's long-term debt isn't significantly high when you look at its net income over a 2-year period, even with Tesla only making roughly $3.5 billion in net income. In a couple of years, if it wanted to, it could pay off all its long-term debt. On MSN Money, you can also go to the quarterly statements and see how it's going every single quarter. Another thing that you can look at in MSN Money is Tesla's cash flows in the financial statement. We will touch base on this in another video. It's really important if you're an investor, if you want to find out the intrinsic value of a company, that you understand the discounted cash flow valuation method. So if we go into Tesla's price graph, you can go into the graph and see how the trades have gone day by day. You can also check monthly, 3-monthly. You can look at the last year, or you could look at its whole life cycle since it's been open to the public. And you can see back in June 2010, Tesla was trading at around $1.70 per share. And now today it's currently trading at $405. You can also go onto Quiver Quantitative and see not only institutions that are holding shares, but also you can see that Elon Musk, the CEO of Tesla, is currently holding 932 million shares. So he's heavily invested and he believes in the company. MSN also gives their own opinion of if Tesla is undervalued, a strong buy, or overvalued, and it currently looks like they believe Tesla is overvalued based on their price to earnings ratio compared to other companies that do business in the electric vehicle industry. In my opinion, I do believe Tesla is extremely overvalued, but that's just my opinion. It's definitely worth doing your own research before you look at buying into any stocks. So that's it today for our stock market analysis for Tesla. There's always so many different shares that you can choose from in the market. So if you see a couple red flags in one stock, there's so many more that you can choose from that might have better deals for you. Thanks for watching today's video. Feel free to like and subscribe, and I'll see you in the next video.